It's exactly 3:35 my time. The Forex market just opened about 3 hours ago, and I have already made 231 pips to be precise. Yes, you got it right. 231 pips as soon as the Forex market was open. So I'm almost done for the week before the week is even started, right? So on this particular video, I'm going to be showing you guys step by step a strategy that can enable you to be able to make money as soon as the Forex market is open on Sunday night. So make sure you stay to the end of the video, because this strategy is beginner friendly and anyone can be able to do it. What's up guys, and welcome back to the channel. My name is Ndemazeah, Godlove, and on this channel we talk everything about trading, business, personal finance, and tips to help you stay profitable on a consistent basis. So if this is your first time coming to my channel, don't forget to smash the subscribe button below to subscribe to the channel so that you can always be updated anytime I come up with awesome content like this. Yes, as you guys just got what I said on my intro, this is exactly 3:35 a.m. because the Forex market used to open in South Africa at 12 midnight. At exactly 12 midnight or 11 p.m. 12 midnight, the Forex market used to be open. And as soon as the Forex market was open, I have already utilized the strategy I'm going to show you guys on this particular video, and I've made a whopping 231 pips. I'm going to show you guys all the setups, all the trades, all the setup, exactly what I did, so that you can be able to copy it step by step. Just like I said, I'm going to be sharing the screenshots and all the trades I took with you guys. I'm also walking you guys step by step on my computer so that you can be able to take the same trade with this particular strategy step by step. So let me just show you guys some few trades, some few currency pairs, and the whooping pips we made on those currency pairs before we even go into the video, right? So on this currency pair, you can see we bank in 35 pips. You can see that is a setup right there, 35 pips on this currency pair. This one we bank in 47 pips. That is the second currency pair. Then on the third currency pair, this one we bank in 62 pips. That is 62 pips on this currency pair. This one we bank in 48 pips on that currency pair. Then this one we bank in 39 pips on this particular currency pair, making a total of what? 231 pips. All right, good. In a couple of minutes, we're going to dive down on my computer and I will be able to walk you guys step by step on all the trades. So what is the strategy which I was able to use to make 231 pips within 2 hours as soon as the market was open? This strategy is called the Forex gap trading strategy. All right, or in short, let me just put in simple terms, this strategy is called the gap trading strategy. All right, what is the gap trading strategy? Let me explain this to you guys. You guys need to understand that even though the Forex market is open 5 days a week and 24 hours a day, anytime the Forex market is closed on Friday, it doesn't mean there are no Forex transactions going on. Forex transactions are still going on all over the world. What is actually closed are the banks. Only the banks are closed. That is why trading is closed, because remember, we take our liquidity from the banks, right? So the reason why we don't trade on weekends is because the banks are closed. Not that the Forex industry is actually on hold. The Forex industry can never go on a hold, like just go on a pause. No. So over the weekend, there are still Forex transactions going on. There are still fundamentals going on. There is still news going on. So there are still many factors over the weekend that cause the Forex market, the market to still be moving up and down. All right. So on weekends where we have big fundamentals, that happens on the Forex market. As soon as the Forex market opens on Sunday night or Monday morning, you'll be able to see those gaps on your computer. So when the market opens on Sunday night or on Monday morning, it will open at a purely different price from when it was closed on Friday. So when this happens, we'll be able to check the distance. We'll be able to check this particular gap to see how big the gap is, and I'll be able to show you the strategy you can be able to trade this particular gap. All right, so that is just the basic of this particular strategy. So once you see this particular gap, the idea that comes in your mind is there is something in Forex they call an equilibrium in liquidity or a balance in liquidity. So once we see this particular gap, the only thing that will help us to make money is what they call a balance in liquidity. All right, meaning whatsoever goes up in forex trading, there's a guarantee that the basic idea is that it has to come down. So even though the forex market was closed over the weekend, there were still activities, there were still there were still foreign transactions going on, and this particular weekend there were many major fundamentals that caused the forex market to move a lot, even though the banks were closed. For example, the Queen of England died. Then they also had a new king. They also installed a new king. So you can see these big fundamentals will be able to cause the forex market to move over the weekend, even though the market was closed. So immediately the market was open on Sunday night, I knew very well that no matter what, as soon as I go on my chart, I'll be able to see gaps that I can trade. So when I see this particular gap, the idea just comes in my mind, which is what? A balance in equilibrium. Meaning all these particular gaps must be filled, because the idea will just come. You need to know that these gaps need to be covered up. So if the market closes at this particular level and on Sunday night it instead opens up here, there is a guarantee the market is going to fall to close this particular gap. If the market closes here on Friday and on Sunday night the market opens somewhere here, there is a guarantee the market is going to go up to fill that particular gap. And that is what I'm going to show you guys on this particular video, and I'll also show you guys step by step how to set your stop loss, how to set your target, how to manage your trade, risk management, and everything. All right, so with that being said, that is the basic behind this particular idea, or the basics behind this particular strategy. Let's get on my computer so that I can be able to show you guys step by step. Good. If you can see on my computer, most all these currency pairs that you see, I've pushed them a little bit outside. These are currency pairs that actually had all the gaps, right? So let me just take something. Let me just take any currency pair. Let's just take something like you can see something like good. You can see something like Great Britain pound USD, right? You can see the market closed on Friday somewhere here. This is where the market closed on Friday. Then when the market opened on Sunday night, this is where the market opened on Sunday night. So you can see the whole of this gap. You can see there's a big gap somewhere here. This is what I'm calling a gap. This is where the market closed on Friday. This is where the market opened on Sunday. And in between the Friday and so you can see this big gap. This big gap in the market is what I'm calling a gap in the market. And there's a high probability that the market has to come down to fill this particular gap. All right, there's a high probability. So I'll show you guys how to select the currency pairs that have the high probability to fill the gap, and also how to set your target. Let's also go on another currency pair. There were a lot of opportunities, a lot of opportunities. Good. This is another currency pair. On this currency pair, you can see I made. Let me just push this one a little bit like this. You can see on this currency pair, I made 35 pips. You can see that's clear. The market open here, that is the current market price. I made 35 pips on this currency pair. And when the market closed on Friday, this was the current market price somewhere here. You can see very clearly. That was the current market price somewhere there. Let me bring something like a box. Let me bring something like a box so that you guys can be able to see very well. Where is that box again? Let me put something like a box. Okay, let me put something like a box. Okay, good. So if I bring in this one here, you can see the market was closed on Friday somewhere here. Then when the market opened on Sunday night, this is where the market opened on Sunday night. So in between here and here, this particular gap is actually what we are trading. So immediately that happened, what do? You come here and you measure the distance between when the market was closed on Friday and when the market opened on Sunday night. You see, when you measure that distance and you see that the distance is between 30 pips and above, all right? So long as the distance is between 30 pips and above, it means you can actually trade that particular gap. All right, don't just measure and you see 10 pips, 15 pips, 20 pips, 25. So long as it is 30 pips and above, it means you can trade that particular gap. So don't just measure anything and you just see 5 pips and you say you are trading the gaps. No. So the first, remember, these are rules. These are rules that you need to follow on this particular strategy so that you can be able to have the same results which I just had. You can see this is my live account. I'm using my live account to take. I use my live account to take all these trades, and I'm using the same account to show you guys the example. So the distance between when the market was closed on Friday and when the market opened on Sunday night or Monday morning, wheresoever you are, must be at least 50 pips. Good. So if I measure from here to here, you can see this distance was what? 51 pips. Exactly 51 pips. Any currency pair, the distance must be at least 50 pips. Good. So as soon as you measured and you see that distance is between 30 pips and above, what do? You wait about 30 minutes, because at that point in time, when the market opened, immediately the market opened, the spreads used to be very crazy. No matter the broker you're using, the spreads are going to be too high, because remember at that point in time, the quotes are still balanced. The banks just opened, the quotes are still balanced. Your brokers are still getting quotes from different liquidity providers, so the spreads are still going to be too high. No matter the broker you're using, the spreads are going to be high as soon as the market is open. So you wait between 35 minutes to 1 hour. All right, these are the rules. So you wait. So that if the market opens, let's just take myself as an example. In South Africa, the market used to open at 11 p.m. going to midnight, right? So when the market opened at 11 p.m., I would normally wait for like an hour or 35 minutes to 1 hour for the spreads to reduce, because at that point in time, this is on this particular column, this is where you're going to be seeing your spread. You can see here, let me just drag this a little bit outside. You can see here, this column is for my spread, my bid. So if you don't have this particular column, I already showed you guys how you can activate this column. So you just go here, you just right click on this particular, on your market watch, you go down to where it says column and you click on spread, so that you can be able to see the spread. When you come here and you're monitoring the spread, you'll be able to see that at that point in time, some spreads here will even be 20 pips, 40 pips, 50 pips. Meaning if you're not careful and you press buy, you can actually blow your account. So you just keep monitoring. But between 35 minutes and 1 hour, the spreads are going to reduce. You can see the spreads here, even less than a pip, 1 pip, 1.5, less than a pip. So as soon as the spread drop between 35 minutes to 1 hour, what do? You come here, there's no analysis involved. So long as that gap is still there, and you've measured the gap and you see that it is it is above 30 pips, what do? If the market on Sunday night opens below the closing price on Friday, then you're going to be buying. All right. And if the market on Sunday night opens above the current market price or open above the closing price on Friday, then you're going to be selling. All right, let me take it again. If the market on Sunday night, if the opening of the market on Sunday night is below the closing price on Friday, then you're going to be buying, because you're going to be predicting that the market is going to go up to feed that particular gap. Like the example we have here, you can see the market opens below the closing price on, this was the closing price on Friday, and this is the opening price on Sunday night. So since the market opened below the closing price on Friday, we're going to be buying this particular currency pair. Take this other example now. This other one, for example, let's take an example where we're going to be selling, right? Good. See this other typical example. The market opens on Friday, the market closed on Friday here and open on Sunday night here. And since the opening price on Sunday night is above the closing price on Friday, we're going to be selling, because they said we are predicting that the market is going to come down to feed this particular gap to form what we call an equilibrium in price, or to form what we call liquidity, an equilibrium in liquidity. All right, good. So that is just what I was explaining. So let's go back to the same example we're using, which was I think the example was USD JPY. Good. So on this particular example, the market opened below the closing price on Friday. So after you've waited for about 35 minutes to 1 hour for the spreads to balance, you just come here. At that point in time, you can see this was about 35 minutes into the trade and I was already somewhere here. So what do? You just come here and you buy. All right, this is where I got into the trade somewhere here. I got into this trade somewhere here because I was waiting. But from year to year, the spreads were still too high. But at around 45 minutes going to 1 hour, the spreads were balanced somewhere. So I took the trade here. And where do you, so as soon as you press on buy, where do you put your take profit? Your take profit goes at the closing price on Friday. So at the same price where the market was closed on Friday, that is where you're going to be putting your take profit, all right? So as soon as I bought here, my take profit was where? At the same price where the market was closed on Friday. And you can see here, that is exactly 37 pips, all right? So as soon as you already know where you're going to be putting your take profit, you divide that into two. to be able to have your stop loss, so that we'll have a risk to reward of at least 1:2. So my take profit was somewhere here at around 40 pips, and I was risking about 20 pips. So my take profit was up here at around 40 pips, and my stop loss was down here at around 20 pips. And you can see the market didn't even go on against me for even a pip. As soon as I bought, the market was just heading straight up to fill this particular gap. And about 45 minutes after that, boom, the market already hit my take profit of almost about 35 pips. Can you see this? This didn't just happen on one currency pair. Remember, I showed you guys the example. This is the example on Euro USD. See what happened, guys. See, this is gonna amaze you. That was the example on Euro USD, on Euro JPY. This is another example on Euro USD. You can see the market is pumping down. This is another example that I made about 47 pips on Great Britain Pound AUD. You can see the market opens above the closing price on Friday, and you can see how the price dropped to fill that particular gap. So you can see the gap is already filled. Let's go to another example. I want to show you guys many examples so that you can better understand what I'm talking about. You can see this is another gap. The market closed on Friday somewhere here. This is where the market closed on Friday, and this is where the market opens on Sunday night. This gap, when you measure this gap from year to year, this is about 90 pips, meaning that is a good trading opportunity. Good, you wait for the spreads to reduce. As soon as the spread reduced, I got into this trade somewhere here, and my target was down here at around 62 pips. So this one is still open. This trade is still open on my account, because you can see I'm still in the trade for now, but I'm already in profit of almost about 28 pips. All right, so that is just what you do, guys. Let me show you guys about 2 or 3 more examples. This is Great Britain Pound NZD. This is the highest one that I made, 62 pips. Guys, look at this example. Look at this typical example. So let me go through this particular example again to follow the steps one step at a time so that you guys can be able to understand it. The first thing you notice, what have you noticed? This is where the market, you can see, this is where the market closed on Friday. This is the market where the market was closed on Friday, right? Then where did the market open on Sunday night? This is where the market opened on Sunday night. Can you see this? So in between this point and this point, can you see the big gap we have? We have this gap from here to here, which is 128 pips. Can you see this, guys? We have this gap from here to here, which is 128 pips. I only made 62 pips on this trade because why? Because I was waiting for the spreads to reduce. Because at that point in time on Great Britain Pound NZD, the spreads were almost about 40 pips. That's crazy. But you need to wait. You need to follow the 35 minutes to 1 hour rule I told you guys for the spread to reduce. So as soon as I measured this and I saw that this distance was almost about 100 pips, I immediately come on my market watch, and I was just watching for the spreads to reduce. After about 35 or 45 minutes, the spreads reduced, and I got into the trade somewhere here. This is where I got into the trade, and boom, I just came here, press on sell. As soon as I press on, I put my lot size, use proper risk management, I put sell. My take profit was down here at around 68 pips. You can see this is 68 pips, and my stop loss was half of my take profit. So my stop loss was 30 pips somewhere here. This is where my stop loss. And you can see as soon as I sold, the market immediately went in my favor. The market immediately went in my favor and hit my take profit within about 45 minutes. Boom, I was already out of the trade. You see, that is plus cool 62 pips. Very cool 62 pips before the market, before the week even starts. I've already banked in 231 pips before the market even starts, before the noise even starts in Forex trading. Let me show you guys another example again. The examples are too many. This is CAD JPY. Can you see this? This is another example. On CAD JPY, can you see I made 48 pips on this particular trade? And you guys, can you see the speed in which CAD JPY used to be able to fill the gap? This is where the market was. Let me just show you guys this. This is where the market was closed on Friday. This is where the market opens on Sunday night. Level, I don't want that. Let me show you this. This is where the market opens on Sunday night. And from here to here, we had almost about 62 pips. I waited for about 45 minutes, got in somewhere here, and I got out somewhere here at around 48 pips. As easy as that. Just follow the same rules. You wait for the spreads to reduce, because don't make a mistake to press buy when the spreads are still high. You can blow your account. Guys, can you see this? That is the process. That is how you manage your trade. That is how you execute it. This is even still another opportunity that I made 39 pips. Can you see? This is where the market was closed on Friday. This is where the market, let me show you this. This is where the market was closed on Friday. This is where the market opened on Sunday night. And from here to here, we have a gap of almost about 60 pips. I waited for the spread to reduce. I got in somewhere here and I got out somewhere here at exactly 39 pips. So if I have to add all these current positions, which these are positions that I've already hit my take profit, I have a total of what? 231 pips. And immediately I saw this opportunity, I immediately rushed to my Discord community and I updated the students in Godlove University. Talking about Godlove University, if you want to be able to part of my private mentee, or if you want to learn Forex trading from the best, then check out Godlove University. The link is on the video description. So as soon as I saw this particular opportunity, I immediately went to Discord. Let me show you guys exactly the updates I gave on Discord. So I immediately went on Discord, and the trade setups, this is, you can see on Discord, these are all the trades. These are all the trades we took on Friday. You can see how many pips we were able to make. You can see how many accounts were, you can see, these are examples. But today, this is exactly what I said today. As soon as the market was open, you can see what I did here. I immediately came here and I updated my students on Discord, and I told them, okay, I've seen that there are a lot of opportunities in the market. There are a lot of gaps in the market. Let's get into the market now and capitalize on this opportunity. So immediately I updated my students. You can see I noted myriad of gas too. You can see most of them. Thanks, boss. I'm on the positive vibe. You can see, sir, the gap strategy worked very well. You can see this is my Discord, and you see exactly what happened, guys. Can you see? These are results. These are results. Exactly what happened after that. So we are not just gambling. At least we have a process that we are following. That's why we are able to have the results we have in Forex trading every day. So guys, thank you guys so much. That is that about the gap trading strategy. Please, I want you guys to practice this strategy. Let me know if you have any question. Let me know if you have any question on the comment section below about this particular strategy. Anything you want to fine tune, if you have been backtesting this strategy, because this is the second time I'm actually talking about this strategy on my channel. I did a live stream once and I spoke about this same strategy, and a lot of people have been practicing it. And we also have this strategy as one of our official strategies in Godlove University. And after the result, after the mind-blowing results that I and my team had today, I thought it wise to still go through the strategy again to show you guys what you guys might be missing. It's not that there's no guarantee that you see these gaps every Sunday, or at the open of the market every Sunday night you're going to see these gaps. No, there are some days the market will open, and if there were no fundamentals over the weekend, or if there were no high impact news events over the weekend, then you're not going to be able to see any gaps. All right, but if there were high news events or high fundamental news events, then you will see gaps that you can capitalize on. All right, so make sure you check the links below to use the same brokers I use, because you can see how the spreads are very low on this particular broker. So if you don't have a good broker, trust me, you wait for 3 hours and the spreads will never go low. It will take forever for the spreads to reduce for you to be able to place your trade. So check the link below to be able to use the same broker I use. You can see how the spreads are low. Make sure you check me out on Instagram. Leave a like on this video, guys. Let's get a video to at least 4,000 likes. Talking about strategies, watch this video which I've made about my 10 pip a day trading strategy. Also watch this video which is one of my top trading strategy. Click here to subscribe to the channel, and I'll see you guys on these other videos. Peace.